If you're a veteran or active duty military member, you may have heard of the VA Home Loan. It's a benefit that helps eligible service members, veterans, and surviving spouses purchase homes with little to no money down and flexible credit requirements. One of the greatest features of the VA Home Loan is that it can be assumed by another eligible borrower. This process is called a VA loan assumption, and it can save you a lot of money in the long run. In this video, we'll be going over what you need to know about the VA Home Loan assumption process. The first thing you need to know is that the VA Home Loan assumption process is only available for VA-backed loans. If you have a non-VA loan, you'll need to go through the standard refinance process. But the good news is that assuming a VA loan is relatively simple and straightforward. So what is a VA loan assumption? It's when an eligible borrower takes over another borrower's VA loan. The new borrower assumes responsibility for the remaining balance on the loan and agrees to make all future payments. There are a few reasons why someone might want to assume another borrower's VA loan. Maybe the original borrower wants to sell their home but can't find a buyer who qualifies for a new loan. Or maybe interest rates have gone up since they originally got the loan, and assuming another borrower's lower rate loan can save them money on their monthly payments. If you're interested in assuming someone else's VA loan, there are a few steps you'll need to take. First, you'll need to get in touch with the lender and let them know your intention to assume the loan. The lender will then pull your credit and verify your income and employment history. Once you've been approved, you'll need to sign some paperwork agreeing to assume responsibility for the remaining balance on the mortgage, as well as making all future payments on time. Once those steps have been completed, the original borrower will be released from their obligations under the mortgage and will no longer be liable for any missed payments. Remember that not all loans are assumable, so be sure to check with your lender to see if your particular loan has this feature. And even if your loan is assumable, there may be fees associated with assuming someone else's mortgage. Assuming a loan typically comes with a funding fee, usually around 0.5% of the total loan amount. So make sure you factor that into your budget when you're considering taking over someone else's mortgage. Assuming a VA loan is a great way to get into homeownership without having to go through the entire mortgage process from scratch. If you're interested in assuming someone else's VA loan, be sure to check with your lender beforehand. That's all for our overview of the VA Home Loan assumption process. Remember to always do your research and work with your military home spot loan officer to ensure you fully understand the process and any associated fees. With a little bit of planning and preparation, assuming a VA loan can be a great option for both buyers and sellers. Thank you for watching.